All right, let's get started, everyone. Thank you for joining us to our webinar, Research Impact and Alternative Funding Routes Through Translation, Engineering and ICT Startup Stories with IP Group. So we have our guests today from IP Group here with us. But before we get started, if you have any questions, please use the Q&A function and we'll address these questions during or after the presentation. And a couple of our colleagues are on the chat to answer them. So the Q&A function you can find either at the top or bottom through your Zoom controls. And yeah, my name is Eric Kifken. I'm part of the Knowledge and Technology Transfer team. And our team assists the academic community to safeguard and translate intellectual property, short IP, generated through the university's research and development for social and environmental and economic impact. And we like to use the research translation cycle for that, which you can see on the right side. And for that, we support transforming ideas and creations into reality, and thereby impact the world we live in and make a difference. In our previous webinar, Intellectual Property at the Heart of Everything We Do, we focused on the right side of the research translation cycle, where we explained what different IP types are, how the process at University of Melbourne looks like, and how our team can help you with this. And a colleague of mine just posted the link to the recording if you wanted to learn about that more. However, this time we're focusing on the left side of the research translation cycle. So how the research can impact the world we live in. And that can be achieved through publications or educated students entering the workforce, exchanges at conferences, or relationships with industry and government and for impact organizations through kind of advising them or consulting them on questions they may have. Our team like to argue that there's an additional form of research impact through formal licensing of technology to third parties who then develop and market products or services. And we see, or we believe there's 3 pathways for that. So it could be either licensing the technology to an established organization or company with relevant experience and channels to market. And that would, for example, be applicable if your research adds a certain feature to a product that's already on the market, or there's high barriers to entry to the market through, for example, regulations or otherwise. And then the other 2 are really for university spinout, which is a new company established by the university that is at least partially owned and controlled by the university in order to translate the IP. And the second one is the staff startup, so which is a new company founded and run by the researchers to translate their IP. And researchers at the University of Melbourne can learn more about this at TRAM, so the Translating Research at Melbourne team. And they have a new program starting soon, the TRAM track. And the decision between going for the university spinout or startup is really about if the research might disrupt a market, or if there's no market existing where there's kind of the market has to be created. So startup might actually fit into this quite nicely and might therefore be the proper pathway for translation. And we really try to come to a conclusion which is the best by talking together with the IP creators and Rick. So Rick is where our team is situated, so the Knowledge and Technology Transfer team and the Business Development team. We decide in collaboration which is the best option to create impact with the IP. So it's really about figuring out what would be the best path forward. And it really depends. Some researchers might not want to be working in a startup, but might want to advise. So that might be where the university spinout comes in. And in this presentation, we're also gonna refer to the spinout and the startup pretty much as the same as startup. So it's really just a differentiation that in a spinout, the researcher is not necessarily actively involved in the startup, but might advise or likely to advise. But why should you as a researcher actually decide to go into the startup? Well, you can play a significant role in achieving impact and translation of your research and you can discover and lead new research ideas and directions. And that is due to the fact that the startup obviously is directly engaging with the market, and thereby new problems might be identified quite early on, which then informs the research back at the university. You might also create employment opportunities for your students, which might then join the startup. And you can increase your reputation and academic promotion case, and also reap financial reward according to the 40-40-20 split of the university IP policy, where 40% of the revenue going to the university is returned to the IP creators. However, before joining a startup, there's a couple of things which have to be carried out. As an employee of the University of Melbourne, through your employment contract, University of Melbourne for academic staff, the University of Melbourne owns the IP you create, and thereby a license from for the IP to the startup from the university has to be set up. Furthermore, there could be the use of facilities and capital equipment, such as laboratory space, test and fabrication equipment, and also joint research projects with the university aimed at developing new IP, for example, in that area. And also the use of the university's brand and or joint publicity with the university. And at the university, we really want to support startups if that's the preferred way forward for the translation. So startups in general need money, or any business needs money to work. And for startups, it really depends on the stages of growth. So here seen from idea to maturity. And we have categorized into non-dilutive funding and equity investors. So for the non-dilutive funding, which are sources of funding that do not require sale of company shares and hence do not cause dilution of the startup, could be, for example, if you're self-funding the startup, if you're funding the startup through grants or taking on debt, or through competitions where you won money, or if you're selling products of your company through crowdfunding. And equity investors are investors which invest cash and in-kind contributions in return for ownership of an agreed share of the startup. And that could be, for example, family, friends, angel investors, seed funding, venture capital investors, and strategic investors. Since we have IP Group here as our guest today, I would like to further elaborate on the venture capital investing framework on how that model works. So the University of Melbourne has three venture capital partners, namely Uniseed, our guest IP Group, and BioCurate. And it really depends, like each venture capital firm is a bit different than the others, and even between those three, but also in general. But what they do is they pool funds from different investors. For example, individual investors, super funds, commercial entities, universities, endowments, pension funds, and whatever investors you can think of. But it really depends on the venture capital firm or fund if they accept certain investors in their fund. That's really depending on the venture capital firm, where they pool the funds from. And then as they decide or select their investors, they also select the startups they invest in based on certain selection criteria. So it might be, as we talked before, from the idea to maturity stage from the startup. It might be the maturity of the startup as one of the selection criteria. It might be the expertise of the venture capital firm, and also the market where the venture capital firm and the startup is operating in. So each venture capital firm, again, is quite different, and to decide on their selection criteria to decide on certain startups. What is in common for the three partners with the University of Melbourne is that they all invest in university research or IP. And when they do decide on a startup, they have a certain, I guess, part of the budget or fund kind of ready for that startup. And however, they wouldn't invest the entire amount of money straight away into that startup. They would rather give it out in tranches. And that correlates with certain milestones the startup has to then achieve. And those milestones are really in order to de-risk the technology. So it could be, for example, validating experiments, which would be the first tranche of money, or producing another prototype and getting certain results which are validating the hypothesis for the technology. So it's really about de-risking, and I guess if a technology is not holding up against the market, so if it doesn't have the benefits which were envisioned at the start, or there might be a newer technology coming in as well, which kind of doesn't help the hypothesis anymore, then the startup is not necessarily viable anymore. But in our example, we have 3 startups which succeeded, and that might be quite optimistic. But let's say startup A returned the same amount of money which was invested. Startup B did a lot better. Startup C did not succeed. And startup D also generated a bit more money than it was invested. So those returns are then returned to the investors, minus the management costs of the venture capital firm. The exit, as it's called, when the venture capital firm generates those return, or I guess sells the shares in the startup, is usually 5 to 10 years, and again depends on the venture capital firm involved. So with IP Group, our guest today, there was recently a first spinout, which is called GrowWave. And GrowWave is a chemical-free weed killer through application of microwaves to weeds. And I would just like to play a short video on how the interaction went.
My name's Graham Brody. I'm a senior lecturer here at the Dookie Agricultural Campus. I've been applying my knowledge of agricultural engineering to try and solve some problems in agriculture for a while. And in particular, I've been looking at microwave applications to kill weeds. One of the main reasons for that is because herbicide resistance is costing the agricultural industry about $4 billion annually. And the other important aspect of it is that we need something which is going to be able to do this killing of the weeds without engaging the soil. Microwave will allow to do that. It will kill weeds which are above the surface. You can watch them wilt under the microwave field. And it will also kill the seed bank, which is below the soil, so you don't get a future emergence of weeds. Both are really important. Going from the initial research to getting to where we are now has been a little bit up and down. One of the biggest challenges is to try to get it to a point where the agricultural community can understand what's really going on with the technology. The university has supported me very well, particularly the people from RIC. They've been very supportive and very helpful in setting up the opportunities to engage with outside groups. But more recently, IP Group has taken a lot of interest in that, and they've come on board to try to transition it from research into a real commercial enterprise.
IP Group is a global investor in technology. We're always looking for inventions based on truly world-leading research, and that is solving major global problems. We're regularly working with academics from leading institutions across the world, and the bar for us to get excited about a new technology is unashamedly high. This technology from Professor Brody ticks a lot of boxes for us. The first thing that really excited us about Graham's invention was that it reduces the amount of energy required to kill weeds by a factor of 50. Secondly, their extensive field trials have shown that they can achieve a dramatic increase in yields in crops where they've treated the soil prior to planting with their technology. Developing a spinout company can be a great way of translating your research into impact. But it is hard work, and I regularly talk to academics who tell me that they find this push towards spinout companies to be very intimidating, and they're uncertain about how to even get their head around what it would mean. But you don't have to do it all yourself. There are a number of support mechanisms out there, and I would encourage anybody who's thinking about it to talk to Rick and to talk to us at IP Group.
Working with the people from IP Group has been fantastic, and the transaction has been very good. Probably more of a relief than anything, because one of the important things to an engineer is to actually have an idea find its way into the real world, and this has been able to do that. In terms of achieving impact from commercialisation of research, I would strongly encourage anybody in the academic staff to go and talk to the people in RIC, to do a disclosure of their technology, and to make sure that they follow through the process that's in place. I think it's well worthwhile.
And with that, it's my great pleasure to introduce our guests. Ellen Gorison. Ellen has more than 25 years experience in strategy, business development, and technology commercialization. She started as a chemical engineer in the oil and gas industry before moving into investment banking, advising on mergers, acquisitions, and equity and capital market transactions. Most recently, Ellen led the commercialization function at Cyro, and prior to Cyro, Ellen was CEO of Ceramisphere, a spinout from the Australian Nuclear Science and Technology Organization. And our speaker, David. David holds a master's degree in robotics and a PhD in computer science. Prior to joining IP Group, he worked in the technology transfer office at Monash University, where he supported academics in translating their research projects. And he worked as an engineer and later as a data scientist in 2 venture-backed startups and co-founded one. So, David, please.
Eric, yes, thank you so much for the kind introduction, and thank you for having us. Whenever I see this video of Graham, I get actually quite excited because I think it really explains the process of what we do really well, and it puts it really well into perspective. What I'd like to do in addition to that video today is to have a bit of a conversation around what IP Group is, what our vision is, what we look for in a technology that we then hopefully can support reaching a maturity to market, and afterwards I'd like to use 3 case studies to bring a bit of color into this whole presentation. There we go. So who is IP Group? At the core of our vision at IP Group is that the next generation of world-leading companies are born at the university bench. We believe that impact is, on the one hand, for a company defined via a financial return, but also via a social return or an environmental return. For example, we have a lot of companies that work towards a greener future and towards more renewable energy sources. And what IP Group really does is we connect with academics and help along the lines of the transition from research towards commercial impact and beyond. And I think the following case studies will showcase that a bit better. IP Group started off in the early 2000s now, about good 20 years ago in the UK, partnering with all the major universities from Cambridge over to Oxford, UCL, Bristol, and so forth, and created over the last 20 years just short of 150 companies. Some of them went really well on to become multi-billion-dollar companies and help now a great deal in the COVID crisis, and some of them had a bit more challenges. But then about 5 years ago, IP Group ventured out to America and replicated a very similar model across the East Coast universities in the US. And I think there we have now a portfolio of just short of 20 companies. And then about 3 years ago, we came to Australia in a partnership with the GO8 in Australia and Auckland in New Zealand to really replicate the precise same model again. We very frequently meet with researchers, we have conversations, and we brainstorm around, well, what is it that this technology can solve and what is required for this technology to be the foundation of a business, and how do we go about doing that. And so far, we closed 11 deals, so meaning we created 11 companies. 6 of them are in sort of the ICT engineering space, and 5 of them are in the life sciences, from medical devices all the way to therapeutics. So what is it that we look for? I mean, first and foremost, we look for very strong science that has the ability to make a difference. That usually implies that there should be a strong angle on differentiation. It should be an approach to solving a problem that is very different to all the other existing approaches, that is then ultimately very difficult to replicate for a potential competitor. We would like the differentiated approach to be ideally protected using intellectual property. Some strategies, like for example patents. Again, as we move along into a company, it just really helps to protect the efforts and investments made along the commercialization journey. The problem that the technology solves has to be large, otherwise we can't justify putting our money to work and putting all the effort into it. If it isn't a large problem, that doesn't mean that the technology is bad, it's just not the right fit for our model. And lastly, we need a great team. It's really a partnership, it's really a great effort to bring a technology from the lab to the market, and unless everybody pulls into the same direction, success is very, very difficult to achieve. So what is it that we help with along this journey? First off, we don't ask you to come to us with a business plan. We're more than happy to have a conversation purely about your technology, and we can then support with a business plan. Or we can even bring in external experts that are expert within a specific field to support us together with the research team to come up with a business proposition. There's no need that you form a company or that you have already a company. That is to me something that is operational and that we know how to do it. So really leave that up to us and we're happy to do it. However, if you already have a company, that's also fine. We are also very flexible in what part you as a researcher take in the company. You may want to become the CEO or part of the management, or you may want to stay within the company as an academic and support the company as an academic advisor or in any form or shape. And that is really up to discussion, and we're quite happy to find the right approaches there. And lastly, we provide ongoing support. Once we invest into a company, we have basically weekly meetings with the management team, and later on in the presentation, you will really see that we support basically all our companies very strongly along the commercialization journey. So what are the expectations? First, when we engage with you post a first conversation, we really ask you to work up the project with us. Working up really means, well, we have a technology that is in the lab right now, but what could the vision be for it? What is required to get it from the lab into a customer's or a consumer's hands? And that is really going to be sort of a process that is happening in partnership. Then once we form a company, we really ask you to enable the knowledge transfer into the company. Because even if there is a patent that the company is allowed to exploit, there's so much knowledge in your head as a researcher that developed a specific technology or a specific scientific result. All that is required to somehow in way or form go into the company and then allow the company to flourish. What we give, or the money that we put into a company, is definitely not a grant. So we expect a financial return. As Eric alluded to, we invest money on behalf of other people, and then these people expect that money will flow back to them at some point. Secondly, in contrast to many grants, if we engage and work up a project towards a potential investment, but for some reason we cannot make an investment, we're more than happy to share with you our learnings along the ways. And usually, even if we don't invest, we provide alternative pathways to what you could do if not a startup with us. And lastly, quite important, we share the project outcomes. Because we put our money and so much time into it, we really feel part of that journey, and we want to be part of that journey. So let's look at this, what I just said, through the lens of a few case studies. And specifically, I have 3 companies, all of the Australian portfolio, that I'd like to look a bit around what we've done there and how we helped them to bring the technology out of the university and from there on continue. Canopus is a pure software company out of UNSW in Sydney. Additive Assurance is a company out of Monash Uni here in Melbourne. It's a 3D printing company. And GrowWave is out of Melbourne, and I obviously don't have to introduce it all that much. Let's look at what Canopus does. Canopus addresses the issue around user experience in the internet. So what you have to imagine is the following. There are certain applications such as gaming or Zoom that are latency dependent. Whereas there are certain applications like a download of a new software or sending an email that aren't really latency dependent. I mean, whether that email now arrives within 3 seconds or whether it takes 30 seconds, really it doesn't make much of a difference. Whereas if you play a video game and it lags, it has a lot of latency, that really puts down the user experience. And what Canopus has done is came up with a very differentiated technology to provide superior insights into the internet to what telecommunication providers have currently. And on the back of that, one might then be able to take actions in order to possibly prioritize a gaming traffic over a download traffic. The way this would look like is the following. You basically identify which traffics they need to be prioritized over other traffics, and then you act accordingly. So let's look at these four points that I've alluded to at the very beginning. And let's start with differentiation. So Canopus isn't the only company or the first company that recognized this problem of latency dependency on applications. And there's a whole bunch of companies that use so-called deep packet inspection to try and do the same thing. Now the problem with that technology, that deep packet inspection technology, is that it doesn't scale well, and it doesn't work as well with encryption. So moving forward, more and more traffic will be encrypted, and also moving forward, more and more traffic will be going through telecommunication providers. So Canopus has a very, very different approach to deep packet inspection. Instead of having to fully analyze each of the packets, they basically observe the traffic patterns and use machine learning to then infer which data flow belongs to what type of application. It's a very differentiated approach, and that made it attractive for us. Speaking of a large problem, I mean, the internet is about as big as it gets, and if you can increase the user experience of gamers in the world and Zoom users in the world, that's really a very big impact. And the team around the Canopus company, which by now has grown about to 10, has been very strong and has been really something that was a pleasure for us to work with. On the one hand, the professor has decided himself to join the company as the CEO, but also he was able to bring a lot of students along the journey. And at the very start of the journey, Canopus had 3 patents protecting their technology. And ever since we started the company, more and more patents have been filed. And after filing the patents, the researchers then also published publications. So let's look at a bit of the journey from sort of our first engagement all the way to where we are right now. This technology was disclosed to us first in sort of mid-2018. And then it took us sort of 2-3 months to actually come to a conclusion to say, yeah, really, that's the right technology for us. And these are the steps that we would need to take to move forward. And then the company was closed, the company was formed at the end of 2018. At that stage, the technology readiness level was, I would call it, between sort of lab and a commercial product. It was definitely not a commercial product, but it was also more than what you classically just hack up for writing a paper. So it was somewhere in between. We thought that the technical risk of creating a product on the back of that prototype was relatively low and was primarily engineering. And we had already campus trials going on at UNSW. Ever since, what happened is the following. The university remained very strongly involved. So research grants went back to the university, and there's some students at the university working with GrowWave, and some past students work now as engineers at GrowWave. So it's a really sort of an ecosystem that is developing there. As I alluded to before, there are multiple patents filed since, since the company was formed, and these multiple patents really show how much innovation is still going on within this company. The company, and specifically also the professor, got a lot of press and on the back of that reputation, and the company is really a good vehicle for linkage grants and so forth. In terms of technical progress, we now have a well fleshed out technology that sits with customers and does what it's supposed to do, provide value to these customers. Let's move on to the second company, to the second case study, which is Additive Assurance out of Monash University. So the guys at Additive, that founded Additive, they were users of 3D printing themselves and found its capability outstanding. They realized what a transformative power 3D printing had. But with some of the customers or with some of the use cases that they worked with, whether that's aviation or critical infrastructure, they just realized that quality assurance was a big issue. Classically, what happened is you have a 3D print, and then you take it out, and after the print is finished, you have to somehow assess, well, is the quality as high as I need for my specific application? The 3D printing is obviously not just there for prototyping, but really also for having products that can be used. So Additive Assurance was like this, or the guys behind Additive Assurance were really saying, we need to find a solution for this. And what they came up with is that box on the right side of that slide that contains a whole bunch of optical sensors that basically film. It's not filming, but they look at the print whilst it is done. And the data that is then collected is fed into a number of data science models and is used in very clever ways. And then they have some machine learning capability to then really, in real time, figure out whether a print goes according to how it should go, like whether the quality is high or whether there is in fact a defect and something doesn't well. What this enables is two things. First, a print can be stopped immediately if a defect is detected, which saves time and money. And secondly, as soon as the product comes out of the printer, you immediately have quality assurance. So let's look at these 4 points yet again. In terms of differentiation, what attracted us so much to Additive Assurance as an opportunity and as a technology was that previously there was either no quality assurance or there was some post-processing. For example, a CT scan or whatnot was used to test the structural integrity of a 3D print. And the additive technology was a very different approach, and obviously as a result the implications are quite big. We do think that it's a very large problem that leads to a very large market. Now, while 3D printing is still a nascent field, it's growing at a very interesting rate, and even more so, we believe that Additive Assurance has the ability to actually open certain markets that otherwise couldn't be served by 3D printing. Again, the aviation or critical infrastructure will be these type of markets. A very good team. Here, the PhD student and the former supervisor have banded together to create the company, and also they take up some students with them along the journey. Again, this technology is protected using a patent, and that gave us great comfort that in future nobody could simply replicate our efforts, and we could move on with that company. A little bit of a timeline for Additive Assurance. The initial concept was somewhere around in 2016, really as a research result. And they then commenced the research with the way you would normally do that in a PhD, which then led to the filing of a patent. Further work commenced, and the researchers themselves, they created the company, and they went through a whole bunch of accelerator programs, incubator programs, and so forth, and they made actually quite a bit of progress on themselves. And then, towards the end of 2017, beginning of 2018, IP Group came into contact with Additive Assurance. We did our due diligence, and we really believe that in partnership together with Additive Assurance, we could create something great. As it stands right now, we have a ETAP product launched that is in the hands of customers and does what it's supposed to do. Coming to our third case study, which is GrowWave, and I think I don't need to lose all that many words to introduce what it does. But really here the vision behind GrowWave is that currently you have a whole bunch of chemical intensity in the farm, and we want to reduce this because on the one hand it's just not healthy, but on the other hand it just has an environmental impact that is quite dramatic. Using heat for killing weeds is nothing new. There are quite a few people that use either burning down weeds or they may use steam. And even microwaves have previously tried to be used to kill weeds. But the problem was always that there's a lot of energy required to kill these weeds, and as a result, the cost was always way higher than just using chemicals. Now what Professor Brody has done, he created an applicator that really allows to concentrate the energy in a very small part of the soil and hence increase the efficiency to a point where it becomes competitive with the price you pay for chemicals. So a very different approach that enables this technology being used in the field. Weeding is a very large problem. It's a global problem. In Australia alone, it's about a $5 billion problem, and it scales accordingly in the US and in Europe. Professor Brody decided himself not to join the company, but remain being a scientific advisor. And again, that's fine with us, but it's very important to really say that unless he wouldn't translate his knowledge to our engineers in the company, it would be very difficult for the company to move forward because they would actually have to start from scratch. And yet again, a patent protects the invention of Graham and allows us to move forward with confidence. What you can see here with regards to the investment process is that it took quite a bit longer than, for example, with Canopus. The first time Graham Brody presented this technology to Rick was in mid-2015, and the patent wasn't filed all the way until December 16. Now, the reason it took so long wasn't because people didn't want to push it forward. It's just the nature of how it goes sometimes. He had an initial result, then initial conversations, and sort of like more and more research emerged. And he just really wanted to be quite clear that what goes into the patent is really a solid foundation that could go into a company. And then it took sort of like all the way until June 2019 before we then closed the investment. And what was important for us is really to understand the efficiency behind the system. Until we got comfortable with that, that just took quite a bit of time back and forth, where there really was learning on the one hand in IP Group, but also for Graham's team. At that stage, the prototype was really a lab prototype. It looked like a lab prototype, and it had the lab prototype scale. What we have now, after we closed the company, is we have a workshop in New South Wales. There are 3 engineers working with us, together with a commercial person that really does, on the one hand, technical project management, but engages with all these potential customers, in this case being farmers. And we're really strongly working towards field trials. During the course of that work, there was obviously a lot of press and, again, reputation for Graham. And the field prototype that we have now that allows us to do trials on the farm is really quite different to what initially was brought into the company as a lab prototype. So in conclusion, I'd just like to talk a bit about the value add that IP Group brings. So with Canopus, after we closed that investment and after we founded the company, ever since then we have weekly meetings with the management team, sometimes more, depending on how much support they need, whether that is for strategy or operational questions. We very strongly support them with IP strategy and management, because that's something that most people aren't very excited doing themselves, but again, it's immensely important. We mentor the CEO because it's his first time that he does a company, and we're also quite happy to bring in other people that are able to actually further mentor that CEO. And we very strongly help with fundraising. Just because we invest once into a company doesn't mean that there will be further fundraising rounds. Usually, we invest the first tranche, which is relatively modest, in order to de-risk the technology, and then further funding rounds will be required in order to scale the company. Let's look at additive assurance. Here again, the former PhD student became the CEO of the company, and he needs mentorship, simply because it's the first time that he spins out the company from a university, and there's just so many challenges that he's otherwise not aware of, and it just makes it easier for him to address these challenges. We brought our expertise into the company with regards to customer trials and sort of defining value proposition, and really work with the team on how this could look like. And furthermore, we're a large international investment company, so we've got networks not only in Australia, but across the world. And with GrowWave, we at IP Group actually created the team. We found the engineers and the commercial people, and really therefore facilitate the technology transfer. We now support the company with grant applications, again also with IP, and basically all the operational matters that just the company either doesn't have the capacity to do it or not the required expertise. And also, again, we help with the fundraising. So I hope this gave you a bit of an overview of what we do and how we can support you in bringing your technology, your scientific results from the lab to the market, and sort of like increase the impact of your work. If you would like to get in touch with us, and really getting in touch with us, I urge you just to give us a call or reach out, and it can be very casual. There doesn't need to be any flashy pitch deck or so. So we're very happy just to have these casual conversations, and please reach out by either just sending myself or Ellen an email, reach out to Rick that can introduce you to us, or even easier, I've posted there a Calendly link that is also currently being posted on the chat. Click on the Calendly link, and there are a number of dates towards the end of this month that you can easily just book a session with us, half an hour, and we'll have a bit of a chat around your technology and how a pathway forward might look like. So thank you for that, and if there are any questions, we're more than happy to answer those.
All right, thanks David and Eric for that great presentation. So we do have a couple of questions from the attendees. So the first question is probably for David or Ellen, and it's around valuation of how do you value a company pre-revenue generating companies, and what's the instrument in which you invest? Is it a convertible note or is it something otherwise?
Yeah, that's an interesting question. We've got a partnership agreement with the universities where we say technologies that come into a company, or the company that then holds the technology, the right to exploiting the technology, is valued at 1.3 million Australian dollars. And we then put money into this company, usually as a shareholder. So we really take as an investor the same type of shares as you have as an academic. Eric can allude on how you may hold your shares as an academic in the company, or your interest, better than I can. But basically, we invest alongside the other contributors on par with the same type of shares that you may have.
Thanks, David. So I guess the next question is also to do with this, but I guess it's with Eric and David as well. So from the university side, how are commercialization proceeds distributed? And then from startup side, how is it also shared with investors like IP Group?
Yeah, maybe I'll start off with this and then give over to Eric. What we usually have is a number of different shareholders. For example, IP Group holds part of the company, University of Melbourne holds part of the company, and the University of Melbourne may hold interests of a researcher. But in addition to these two parties, there may be other people that are shareholders. Maybe we have a third company that invested into the startup, and maybe we also have a team that, for example, gets shares in addition to a salary. So there are a whole bunch of different shareholders within the company. And as the company grows, that shareholder register will usually change. And then at some point, there will be an event where the company is either sold or the company, for example, does an initial public offering. But let's assume the company is sold to a bigger company, then the proceeds are distributed according to the shareholding. And so therefore, a part of the money goes to IP Group and part of the money goes to Melbourne University. And then Eric can sort of allude on how that part of the Melbourne University gets split internally.
Yeah, so at the University of Melbourne, as I mentioned at the start of the presentation, through the University of Melbourne IP policy, we have a split of 40-40-20, meaning that 40% of the returns are shared with the inventors. And that's really as an incentive for inventors to disclose the IP and pursue research translation. And that 40% really goes to the inventor's private account. So it has nothing to do with consulting accounts or anything. And then the other 40% goes back to the faculty of the researcher who disclosed or worked on the IP, which then the faculty can distribute these funds as they see fit, which could, for example, also go straight to the lab of the researcher, but it's really at the discretion of the faculty. And then 20% goes back to University Central. Yeah, that's pretty much it to further support research translation.
Okay, thanks, Eric and David. So I guess it is a pretty complex process at the end. So if I'm a researcher and interested in this area, and I think I have some useful research that could be translated this way, where do I start?
I think I agree that it's a complex journey, but most of the complexity is actually taken off you. Because I think when you go to Rick and you talk to Rick, a lot of the complexity around filing a patent, dealing with all the legal agreements and all that stuff, Rick is great at supporting you and actually taking the lead on that. But the way you start is maybe just schedule a session with us through that Calendly link, or just reach out to Rick and kick off an initial conversation. And from there, really, you can take it forward. Because ultimately, I think the complexity is there, but there are a lot of people that help you manage this complexity along the way and actually resolve it for you.
Agree.
Thanks. So, Eric, is there a specific area where where researchers need to reach out to you? Is it through email or is it what avenue?
Yeah, so our team can be reached. So what David was alluding to is kind of what we call an invention disclosure or IP disclosure, which can be filed through ServiceNow, for example, and you can search it through whatever thing you can think of, patent, entrepreneurship, IP, it should come up. But you can also find more information on our team on the Research Gateway, and then just contact one of our team members to have an initial discussion, or contact your business development representative in your faculty, which can help you as well to connect with us.
Thanks, Eric. So another question for David and Ellen. Can IP Group give examples on follow-on funding in companies? How much do you contribute in future rounds? What is the range of the investment ticket size?
Yeah, no worries. So as I said before, initially we usually start off with a relatively modest amount of investment. Might that be something along the lines of $1 million to $2 million, or it could be even lower if there's really just a technical de-risking that we need to do. But let's start off with about $1 million, and then as we move forward, these ticket sizes, they can increase to maybe 5 million, 10 million, and so forth. But IP Group, we believe strongly in partnership, and as we move forward, And these companies, they scale, and we bring in additional investors. So as an example, I can bring to you one company, Ceres Power. We invested when they were valued at about $1 million. And along the pathway, now they're valued over $1 billion, about $1.5 billion. And along the pathway, in the beginning, we continued to invest, but we always brought in different types of investors that on the one hand have deeper pockets, but also have a more strategic alignment with where the company is going. So it's not so much about just how much we put in, but how much capital we can find that also goes into the company. And we always put a lot of emphasis on not just finding capital, but really investors that believe into the vision and they can support the company in achieving sort of like greater results.
Thanks, David. So the next question is for Eric. So from a researcher's point of view, who is the first point of contact at RIC? Is it TRAM or is it RIC? Or is TRAM part of RIC?
Yeah, TRAM is not part of RIC, but at the end, wherever you start your journey, that's up to you. At TRAM, you learn about certain frameworks which help you to identify a market, which might help you to where you could look for technology. If you have a platform technology, for example, they can help really well in, I guess, identifying a path forward. However, part of TRAM is as well that an invention disclosure is put forward to our team. And there's really the part of that if you should, that you shouldn't necessarily tell everyone what your technology does or how it works, because otherwise a patent can't be filed anymore. And then the technology itself might lose its value for commercialization or research translation. So it's really a kind of it's a good way to start a TRAM, but it's also a good way at the start of ours. Either way, kind of along the journey, you would interact with both.
Okay, thanks, Eric. So the next question is for the both of you. And so the first question is for Eric, is the 40-40-20 rule that the university has, is that a university-wide industry standard? And for David, is the 1.3 initial valuation an industry standard?
Eric, I'll let you start.
Yeah, so the 40-40-20 is not, it's for the University of Melbourne. And so how other universities are doing that is really up to them and their policies. I've heard of similar arrangements, but I wouldn't comment on the split itself. And I believe it's all the faculties at the University of Melbourne. I'm not sure, Shireen, can you comment on that?
Yeah, so the 40-40-20 rule is a university-wide policy. Not all universities may have the same rule. We do know in certain industry settings, they don't have this rule. So this is just the university trying to give back a little bit as an incentive.
Yep.
And maybe I'll comment on the $1.3 million. So the reason IP Group and the GO8 and as part of that Melbourne University have that agreement to have $1.3 million as a standard valuation is to make our job easy. It's hard enough to get a company off the ground, and if you always end up in an argy-bargy about how much valuation you have, that makes the process even longer. Having said that, in many respects, we think that the $1.3 million is a very attractive valuation for many researchers, because at that time when we invest into a specific technology, that is extremely early. That is so early and so technologically still far away from what a commercial product looks like, that most other venture capital firms would simply not be interested. So from that point of view, it's a bit difficult to say whether it's industry standard, because we believe that we actually start investing before our industry naturally would invest. So from that point of view, it's a bit of difficult to say it is an industry standard or not.
Thanks, David. So I think that's all the questions that we have. If there's any other burning questions, please feel free to roll them in and we can try to answer them. But
Shireen, it's Ellen Gorrison here. On the question of valuation, if I could just leap in and say that, you know, valuations need to be justified. So if if people feel that their technology is worth more than $1.3 million, then, you know, we're always willing to listen to rationale to justify that. So, you know, if they can identify a market or have a huge amount of revenue or traction, or, you know, have reduced the risk to such an extent that, you know, they think that their company is going to go forward and become a unicorn, and we can actually justify that, then obviously we can increase the valuation. So I wouldn't let valuation be a sticking point, but I would say that it has to be justified, and people have to, you know, give concrete evidence as to how they're overcoming their risks and how big their market is and how they're going to attack their market, how they're going to go in and make money with this business. And if they can do that, then maybe there's a justification for a higher valuation.
Thanks for that, Ellen. So I haven't got, sorry, David, did you?
No, just agreeing with Ellen. Yes, very good point.
So I haven't got any more questions to that.
All right, well then it's 1 minute before 1, so you might as well finish the webinar. And so thereby I would like to thank our guests from IP Group, David and Ellen, and then thank all our attendees today. Thank you very much and have a nice Friday. Bye.
Thank you for having us.